The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we'll take a quick look here at the gold market. We had a $24 rally off the bottom yesterday, and now we're pulling back. We're just about unchanged on the day now. We've got a very strong fib point coming in there at around the 1060. That's the 61% retracement of the low from 1051 to the high at 1074. So we'd want to keep an eye on that very, very closely, because that should be some good support. Crude oil has broken down below the lows of yesterday. We're approaching the 786 retracement there in the crude oil at the $41 a barrel level. There's a pretty strong support at that level, I would believe. But if these levels fail, folks, you know, we're still in a really bad bear market in the commodity market. So you've got to be really, really careful if you're you know, looking to get on the long side of these, because they still really haven't bounced very much at all. $24 in gold hardly is a swing. We were looking for a minimum of a $34 swing, which is the harmonic number in the gold. Now, the first chart that I've posted in here today is a chart that John Logan was talking about right before I came on the air. It's Amazon from the very beginning. And if you can see here that it's made on this monthly chart, it has a big ABCD pattern with the BC swing is 382 of the AB leg. And as you can see, we're right up into this target area of $700 a share. Now, I don't know anything about the economics of what Amazon does, but I'll tell you this: I think it's one of the most one of the best run companies I've ever seen. I do all of my shopping at Amazon. I mean, I order something, it's shipped to me free. I get it the next day or the day after. I can return it anytime I want with no charge. I mean, that's a really a good deal. And so I'm sure someday down the road he's going to be charging for the postage and stuff. But what he's going to do, he's going to have a monopoly in the darn thing, and so he'll be able to do pretty much whatever he wants to do. No one's been able to duplicate what he's been able to do. Mark Douglas lived in Scottsdale, and one of his neighbors was one of the executives for Amazon. He had worked at Microsoft for many years, and Bezos hired him away. He was a savant. The guy was a mathematical genius in computers and stuff, and he told us, you know, how well, you know, the company is run, and it was really interesting to listen to what he had to say. Now, there was one other thing that's going on today, and that is President Obama is speaking in France, and I had a memory of one of my trips to China. I'd been going to China since 2000 for the Chicago Mercantile Exchange, giving speeches at the 11 major universities, introducing them to how commodity markets work, you know, the buying and selling in the pits and margin and all that stuff, and risk reward and the whole bit. And so this is why I was there. It happened to be in June of 2004, and that was the time, I believe it was June 4th or 5th, President Reagan passed away. And he was a very good friend of China, of course, through Mr. Nixon. And what happened was they have a beautiful palisades of mansions where they have the embassies. All the foreign embassies are on one boulevard there in China. I don't know the name of it. I can't remember that. But the main thing is that we were looking at the I was watching CNN, and then they also have the BBC on. And in China, if anybody, any foreign correspondent would mention the name Tiananmen or something like that. They had some keywords that were there. Tiananmen was one of them, and there was a couple others that were there. But if that word was mentioned, it was blacked out. I mean, you just literally went mute, and you just had to wait until the next thing was, you know, rebooted or whatever it was, because they just didn't allow, you know, any talking against any of that. Well, what happened was, when President Reagan passed away, all the flags in the embassy row were put at half-mast, except for France. France would not do it. They just would not put the thing down. And so the premier of China at that time, I don't know who he was, he made the bold move to say, okay, we're just going to turn off your electricity and your water until you decide to comply with what we want to do. And the next day, of course, the flag came down to half-mast. So that was my experience of France and when I was in China. One of my favorite quotes from George Patton is, "I would rather have the German army in front of me than the French market behind the French the French army behind me." So I don't know whether that's true or not, but that's what he said. My uncle was actually a staff sergeant under Patton all through the African and Italian and European campaign, so he knew him quite well. So, well, who knows, whatever that is. Okay, getting on to the markets, they just won't sell off. We sold off yesterday a small amount. I think we're coming into this Friday. We're waiting for this big jobs report, which happens to be a monster cycle day. But this market, you know, it doesn't back out. It uses any excuse to rally back. We closed poorly yesterday, and then in the middle of the night, or middle of the afternoon, I mean, the Chinese yuan was put into the IMF, and they really they did a pretty good thing with that, because they gave the weighting of 10% for China, which is bigger than Japan or Great Britain, which it should be, because it's a much larger economy. So that's going to make it the second largest, I believe, in the group, third largest after the euro. So it's going to be a big factor. I don't know how soon it'll be traded in the foreign exchange markets actively, but it will be a big one. Right now, the yuan is 6.4. I think it was 6.4 to the dollar. When I first started going to China, it was 13 to the dollar. So you can imagine when you went to China, you're basically going for free, because everything was you know, so cheap compared to what it's still cheap now. But you can imagine what it was when you had the renminbi at 12 to 13 you know, dollar renminbi to the dollar. So it was you know, you're getting everything 50% off. So that's a key thing to watch. So we're probably, this being the holiday atmosphere, that we've really started. John Logan talked about that a little bit, and that's true, because you know, this, when we were during the years when I was at Drexel from 1976 to 1982, we really didn't do much business in December. We did you know, some cleaning up and stuff, but that was a time for rest and relaxation at the firm. We really didn't have anything that we had to deal with as far as you know, some of the things that we had to as far as production quotas and stuff. They felt if you didn't make your quota by the end of November, you probably weren't going to make it by the end of the year. So we'll see if that's going to be the case or not. But we'll have to wait and see if it is going to be the true. So we'll be watching these markets here a little closer these next few days, because we're going to have some pretty big moves. We're starting to see some movement in the currencies a little bit today. We've had a pretty good rally in the euro, which we were sort of expecting. We came up and we did a beautiful 1.27 expansion to the downside yesterday at that 105.60 level. The low was, I believe, 105.55, and we've rallied about 70 pips, and it looks like we want to rally a little bit more into that. So we'll be you know, keeping an eye on it. Now, getting back to the gold market, we've only backed off $8 from the high, which is much of a pullback at all. So we're watching to see if it's going to be going to be moving in that direction. We'll see if it will be getting ready. I will put some of these other charts up in just 1 second, folks. It just takes me a minute to get them aligned, but I wanted to really get back to the euro, because the longer term picture in the euro is very clear. If you're looking at the long-term weekly chart, you can see that we're trading right now. We're trading at 106.20 and change. We went down to that 105.60 level, which was that big ABCD on that hourly chart that we focused on yesterday. And but we could get a rally all the way up to the 109, 110 level without any trouble. So we could certainly see that if we were going to get that. Now, the bond market is having a good rally. We've just made a 786 retracement here in the bonds, which let's give me a second here, and I will bring it up, because this is one of the things that we were looking at. And here, we'll pull it up here in just a second. And if the bonds are ready to move, we could get them in a spot where we're getting ready to see the market turn down. But if we get these the DEIS bonds, I'm still looking at DEIS, because this is the first day of December, and they're already switched over to the March. But I watch the DEIS because I have better data in the DEIS bonds than I do. Well, I have good data in the March too, but it's just more active data in the December. But if we get December above the 156 level, then that'll tell us that we're probably going to go a little bit higher. That would be what I would be thinking of in the bond market. So that's neither here nor there. Someone's asked me, what are the probability of gold turning here? I think it's got a really good chance, folks, because of the way that it came off. I mean, it jumped $24 the first day off of that bottom, which we were expecting, which was a good sign. We haven't, backed off very much at all. We've only backed off to a 382 retracement in the gold. So right now, it still looks okay. If we get it above the 1075 level today, that means the next level we're looking at is 1090 to 1100, and above 1100, it'll start getting some people interested, because that will be $50 off of the bottom, and that would be a sign that maybe they are looking at something really, really important. So that's really what we're watching here from that perspective. So we'll watch it a little bit, excuse me, a little more closely here on what we have moving on here with the markets moving the way they are. Okay. The next one is the silver market is still acting better than gold. We made much higher highs in the silver yesterday. We're going to take a little break here now. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we are going to take a look here at the price of Google over the past 8 months. And as you can see, when we made the low back in December of 2014, a year ago, we've completed a big ABCD pattern perfectly up there at the 765 level in Google. That doesn't mean it can't go any higher. It just means that that pattern is completed. It's very similar to the pattern that we showed on Amazon, which was the long-term monthly chart. Now, as you know, that ABCD pattern was the one that Gartley made so famous. On page 249 of his book, he developed this pattern showing how parallel channels move within these ABCD patterns, and that describes just about all market action, starting with tick charts, you know, going all the way out into the monthlies. The problem is that sometimes the CD leg is going to be 1.27 or 1.618 or 2.618 of the AB leg, and that does happen. A perfect ABCD pattern, one where the AB is absolutely perfect to the CD in price and time, only happens about 40% of the time. The rest of the time, the CD leg will either be 127, 1618, or something higher. Once it goes beyond 1.618 of the AB leg, this old boy, he don't look at it too much, because I don't know where it's going to go past that. The only other number up there is 2, from 1.618 to 2.0, and then beyond that you only have 2.618. So beyond 1.618, that's the last line that you draw in the sand, as President Obama would say, like he did in Syria, and the line just disappeared as the wind blew it away. Anyway, what we'll look at now is the fact that we've got several of these big stocks that are doing the same thing. Of those Dow stocks that we watch, 10 of them are very high priced. You know, we're looking at Goldman Sachs, and which is the highest of the Dow stocks. We have Nike, you know, and some of the others. So a lot of these are hitting the main patterns are completed, and that's part of the reasons why the market is moving up is very selective. It's basically, you know, I've mentioned this too many times, but it's about 150 stocks when you look at the S&P 500 stocks, the 30 stocks of the Dow, 10 of which are moving pretty good. And then you also have of course, the 15 stocks in the NASDAQ 100 that account for better than 70% of those stocks. So those are the things that you want to keep in mind. It's a very, very selective rally. I wanted to bring this chart that was furnished to us by Mr. RK, Mr. Randy from the Tiger Den. And he showed us something that was done through Black Star funds that showed that most of the action is happening in just a very small percentage of stocks, and that's not very good on a broad-based rally. So that's you know, something that you might want to you know, keep in mind, that's what's happening. Now, I did want to show a chart that was brought to my attention through Zero Hedge, which is a good information program, and they were showing the best money managers this year so far with their rates of returns, and I thought I would bring that in there to show you you know, what's happening, because some of these fellows that have been, you know, really the stars of Wall Street are really getting hit badly this week. David Ackman from I forget which one he's with, but he's down over 20%, but that's due to several, you know, stocks that he was guessed wrong on. But that's all part of business. There's nothing wrong with that. What you got to do is you got to not concerned on how much you're going to win, it's how much you're going to lose, and that's the whole key to what you're looking at. You don't want to go into something where you're going to risk everything. So keep your risks as small as you possibly can, and you'll be far better off than if you're just you know, just throwing darts at some of these things without any idea of what's going on at all. So that's the key to investing. It's not how much you're going to win, it's how much you can lose. And you got to reverse your thinking. Most people think, how much can I make on a trade? And that's the main thing. So we'll see. We got Janet Yellen will be speaking tomorrow, and I believe they have 2 other Fed governors are going to be speaking on basically on Thursday, and then one again on Friday. And then Friday's the big day for the non-farm payroll jobs report deal and all that other stuff that they have coming out. There'll be a plethora of data. We've got that big Astro date setting that day. So my assumption is we're probably going to be making a high in stocks around that time. How high it's going to be, we'll have to wait and see. We'll be right back after these few words.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we are not too much different than where we are before. Stocks are pretty much where we were pre-market. We've only been open about 4 or 5 minutes now, so not too much is going on. The interesting thing is that we've taken out yesterday's high in the March Treasury bonds. They should have some pretty strong resistance up here at this 154.20 level. That'll be an ABCD over the last several days, so that's one thing you might want to watch from a trading standpoint, is to see if those March bonds get up to the 154.20. The trend is still down, and we've certainly corrected the minor oversold condition that we had, just recently. So we want to, follow that closely. I think bonds are going to go a lot lower eventually, which means higher interest rates. But so far, the Federal Reserve has not capitulated, but they're probably getting closer to looking at it. Now, someone's asked me a question about the crude oil because I was talking about some support at the 41.10 level. That was the 786 retracement. Well, we got down to 41.17. I can't tell you whether that seven ticks is the actual bottom or not, but we were able to rally 70 pips off of that. So that could be a pretty good bottom in the crude oil. So we'll be watching it. My main focus today, folks, is what I'm looking at is the gold market, because I believe if we get down to this 1060 level, we got a chance for some pretty good support. Silver's acting very, 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 very strong. And, we'll see what's happening. By the way, I got a very beautiful gift from one of our folks here at TFNN. He sent to me a beautiful silver paperweight of a pure silver ingot. And it's really beautiful. It's a 5 ounce, and it's really quite a beautiful piece, very shiny and everything. So I wanted to send along my thanks for that, along with some of the vegetables that some of you folks have been sending me. That's greatly appreciated also. So we'll see what's going on. I had one request from someone, and that is to say, tell me one of my most interesting stories of all my years in trading. And boy, there's been so many of them, but the one that I think would be related to market would be when I first went to Chicago in 1982. They started trading the S&P on April the 16th of 1982. I got there in January. I had just left Drexel after 6 years, and I wanted to go back because I knew these desktop computers were coming, and we were going to get really good charts, and we were going to get data, that we could actually see the charts, all day long. And you couldn't get intraday charts. All you had was a Crotron, and you could get some prices, but you couldn't get a printed out chart unless you had ADP's special program, which was like $10,000, and the only one in the whole area was at Conti Commodities. So I knew that was coming. So I went to Chicago to find out, how our stops would be calculated. In other words, so if you had a stop in, whether these stops were being flashed by people. And after the first week, I had met Byron Tucker, who was running Goldman Sachs's desk, and I told him what my goal was there, and he said, that doesn't happen very much. Well, about 3 or 4 months later, I'm trading, and I have I'm short 3 contracts of pork bellies. And there was a cattle on, it was January January of 1983, and I had no, it was January. Yeah, it was January of 82. Yeah, because I got there in January of 82, and I was short 3 bellies, and they're fed bellies, and this was January, and there was a cattle on feed report that came out, and it was so bullish that they were talking about cattle being up 3-4 limits in a row. That's how bullish it was. And they'd been going up for quite a while. Well, the girl that was running the desk for the pork belly pit had worked for me when I was at Drexel Burnham. Jan Sklar, her father was a floor trader there, and she held the paper for Morty Zeidman, who was the lead contract holder for order filler for fed bellies. So I went over to her and I said, look, I said, I'm short 3 fed bellies. I said, can you get these on top of the deck, so that I could maybe get filled right away? And I knew that was against the law, the rules of the exchange, because you just didn't do that. She walked, as soon as she left, I said, oh my God, I made a mistake. And I tried to run over and get her, but by then it was getting crowded and I couldn't reach her. And she came back to me and she says, he wants to see you. And I knew I was going to get tagged really bad for a fine. I just knew that. And she said, all I can tell you is, she said, he's only 5'1", so make sure that you stay on the bottom step and you're looking up at him. Just do that. And I said, okay. So I got there. He was on the second step, so I was on the ground, and I told him I apologized. I said, I'm really sorry. And he says, what's the problem? And I said, Mr. Zeidman, I said, I'm short 3 bellies, and I thought that if I could get filled limit up on the first limit, then I could mitigate my loss. I know that's wrong. Whatever fine it is, I'll take it. I'll never do it again. He says, fed belly's going to be up the limit. And I said, well, cattle are going to be up the limit. 3 or 4 days they're talking about it. And he said, Feb bellies are going to be up the limit. And I said, well, that's what I think. And he opened up his deck. The only time I ever saw a deck in the 3 years I was there, he opened up his deck, and the very first order was sell 500 Feb bellies at the market. And I looked at that and I said, wow, I said, is that a legitimate order? He said, son, he says, that's just the first one. He said, now go back over there to those currency pits and those T-bill pits where you guys hang around, and don't bother us over here where the real speculation is. And the next few minutes, cattle came out. Instead of opening limit up, they opened slightly higher and were limit down, just like that. 5 minutes later, Feb bellies opened, they opened limit down. So that was my only experience of ever seeing a deck in all the time that I was ever there, in Chicago, and that was just an aberration, I guess, more than anything else. So we're seeing the market strengthen up here pretty good. We've now got the S&P up about 13, and the Dow's moving up to about 100. So we're going to be another update, it looks like, and we'll be going a little bit higher. It looks like we're going to be going higher into Friday. Because that's the big astro date, and I don't see anything reasoning to push this thing down from where we are right now. So this is going to be a very interesting cycle high that we have coming in here on February, or on December the 4th. In fact, if that's going to be the cycle high, that we're watching. So we'll keep an eye, really closely peeled on that to make sure that's what we're watching. Currencies haven't really done very much. The euro went up, made a slightly higher high, up at the 1.27 level, up at that 160.30 level, and the rest of them are really, not doing a whole lot. So we'll watch that. We still have the gold is almost unchanged on the day. Now we're still up a couple of dollars, but keep an eye on this gold at the 1060, folks. I might be wrong, but there's an ABCD pattern there over the past few days, well, yesterday and today, that would take you down to that 1060 level in the gold too. So that could be a real interesting spot to to watch, what we're looking at here. From a shorter term standpoint, but I think that long-term picture that we have in gold, it certainly looks like it has a chance, to do that. I'll put this in here to take a look at it, and you'll see, where we are. We hit this 1051 on Friday, and we were able to rally up to the 1074, which was basically the old bottoms. And but if we can hold this 1060 on the pullback, we've got a chance here for the gold to move up a little bit. And so we'll see, see what's going on, see what's going on with that. So that's pretty much it. One other thing I wanted to mention is Morgan Stanley came out last night, I guess, and had decided to reduce their trading staff by 25% in Forex and commodities and stocks. So the stock is up. I guess they figure there's going to be less people to pay off, or to pay salaries for. But I thought that those people were the ones that actually brought in the income. But we'll see what's going to happen on that. It's certainly being anticipated as being very strong to the market because it's opened up quite a bit. It's up about looks like it's up about a little over $1 right now. So it could be get up to that old high, I guess. We stopped exactly at the 618 retracement in the Morgan Stanley just 6 days ago, and now we're having this pretty good rally here. We're at the 786 right now in Morgan Stanley, up here at this 35.25 level, which is so far been the high of the day. Now we're making new highs now in the S&P, and also the bonds are starting to move. So we're getting some rocking and rolling here, folks. This is what we want to be seeing. So we'll see how much thrust this is going to have, before this thing finally, moves, to the to the downside in stocks. I believe it will be this week, but this has given no indication. We've had some bearish news hit the market, and the market didn't do anything. We had a 5% drop in China. Market rallied. It doesn't make any difference what happens. The market rallies. That tells you that the cycle is not finished. That's basically, the bottom line of what you're looking at. So there's not much else you can do but to follow what the thing is doing. It doesn't want to go down now, that's for sure. Last night we stopped exactly at the 61% retracement of the previous day's range down at the 2083 level in the S&P, and we've already rallied 10 points, and we're ready to take out the highs of yesterday, which come in at 2095. We're only 2 points away from there. We're only 2 points away, or 3 points away from the number that we talked about in bonds just a few minutes ago, up here at 154.20. So we, watch these numbers because they're very important, especially in the bonds. That 154.20 level, that gets you up into an area where you're making a 61% retracement off of the highs that we made several months ago. That's equivalent to that 155.20 level, I believe, in the March contract. Let's just double. I believe it. Yeah, it's right near the 150. Right near the 156. We just hit 156. That's the number in the December Treasury bonds, which is the 61% retracement of that whole move to the downside. So we'll watch that closely also. And if you're going to be doing anything in bonds here, you don't have to risk more than about 8 pips or 8 ticks in the bonds, because that would be the spot where you would probably say you're wrong. These numbers are really strong in bonds because of bonds and foreign currency, and that's because of the fact that they're so heavily traded. The bond market is much, much larger, 6 to 10 times larger minimum than the index markets, the S&Ps and the Dow Jones and things like that. So it's not unusual to see that's what's going on. So we're setting it right against those numbers right now. If we pop through, that'll probably give stocks, maybe this will be the day that they reduce the interest rate or raise interest rates, and then you'll see the market get ready to move to the upside in the bonds, because I think we're going to go lower after this rally is finished and the Fed finally does come out and do something. Remember, this is December 1st, and so we're in the time frame where Janet has always said this might be ready for December, and it's got a very strong stock market to do it. So this would be the time that if she wanted to do it, this would be ideal time, to raise interest rates. Everybody's expecting it. It's not a big deal. We're making new highs now in the NASDAQ and also the S&P than yesterday, so we are getting this strength in the market continuing. And now we're getting gold backing off a little bit, so all of this is coming in. We're only $4.5 away in the gold right now, so we want to keep a close eye on that down around the 1060 level and see what happens from that spot. So maybe the old Chinese curse, may you live in interesting times, certainly is true as we come into early December. But boy, we have a monster cycle date coming in on Friday, folks, and I imagine it'll be with a big, some type of a great idea in the, what do they call that thing? The non-farm payroll number will probably be really big, and that'll be something else that will make the thing quite exciting also. So we'll watch that along with all the other things. So we've gone a couple of ticks above the 156 level. That's not unusual in the bonds, but the question is, if they go more than 8 ticks beyond that, then you've got something really moving. But we're in the early parts of the market. We're only in the market's only open 20 minutes, and that's the most active time of the day. Whether it continues or not, we have to remain to be seen. Now we're only $3 away in the gold market, so we'll see if this is going to be a spot to buy the gold or not. Take a little break here. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we have strengthened up in the market. We've got the Dow up about 150, it looks like, and the S&P's up about 15. And we have the NASDAQ up about 34, all in the first half hour of the market. We'll see how much it continues on from this level, but we will watch this, especially keep an eye on these Treasury bonds up at this 154 to 154.30 level in the March bonds, because we switched over to March bonds now, and that's the one to be looking at. That's equivalent to 156 and change in the December, so we'll watch that also. The currencies are relatively quiet today. They're having a little bit of a bounce after the oversold condition that we had, and nothing really exciting is going on at that level. We've rallied just about $1 a barrel in crude oil since we've been on the air, so that could be enough to maybe get the people realize that maybe inflation's coming back. We've got gas here in Tucson at $1.79 a gallon. I have never seen that price in the 20 years that I've lived here, so that's got to be at a real record level also. So this is what we're looking at as we go through the markets this morning. The New York Stock Exchange Index has finally opened, and we're seeing a gap up, and now we are going above the 61% retracement. We still haven't taken out the highs of November the 20th as of yet, but that's just a short distance away. It's only just a few cents, so they could certainly do that without too much going on. And here we have the bonds are starting to strengthen up a little bit. Now we're 3 ticks above that area where I thought they would go, whether that's going to be the stop or not. So there's a great deal of buying in here. The cycle has not turned down, as near as I can tell. It certainly looks like it wants to go higher, and that's where it's going to go. So, as they say, you don't want to fight the freight train. We'll see. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.